Good morning and welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Monday the 17th of June. We've got a relatively settled and quiet session early on Monday morning, not a great deal of direction. We had some big moves on Friday, that came with the dollar. Big dollar rally on Friday on the back of data. Retail sales coming in ahead of expectations, and also the consumer sentiment was fairly solid as well. And it sets us up fairly interestingly for the Fed meeting on Wednesday. There's been this massive positioning with Treasury yields falling sharply in the last few weeks as risk sentiment has plummeted, and also markets have started to price for a more dovish Federal Reserve. Obviously, that sets us up for this week's meeting with the Fed, likely to hint at some sort of dovish move, but without going explicitly dovish with any sort of rate cut or anything. So this is going to be an important meeting, I think, in the coming on Wednesday. And it's interesting that in the wake of that US data on Friday, we've seen Treasury yields which just started to tick a little bit higher again on the 10-year and the 2-year. Certainly the dollar had a massive jump on Friday, and we've seen some consolidation today. Not a great deal of continuation of that move, but I think it's to a certain extent consolidation in front of the Federal Reserve, which there must be a degree of caution behind that meeting, certainly. We saw equity markets on Friday again holding a bit of a consolidation, just rolling over in that rally in the last few days, and that's reflected through other equity markets such as the DAX, which is also on my chart of the day today, so look out for that in a bit. But certainly, the equity markets have a little bit of consolidation mode, I think, ahead of this Fed meeting. We've got the oil market, which is again stable to an extent. That's big sell-off came to an end on last Thursday on the escalated tensions in the Persian Gulf. Oil prices since then started to consolidate again. So, in terms of data points today, we're looking out for not a great deal really on the economic calendar. The NAHB Housing Market Index at 3 o'clock for the US expected to tick a slight bit higher to 67. But other than that, nothing really on the calendar of any note. Now, my chart today is the DAX. German DAX has been slipping back in the last few days as part of this consolidation. It hit a high of 12,227 this time last week, but then since has started to roll over. Arguable possible lower high at 12,201, and consolidation around a pivot in the last few days. Now that pivot comes in around about that reaction at 12,070. Where if you saw the market closing below that, I think that really does start to constitute a bit of a corrective slip. And you look at the momentum indicators. I talked about this on the weekly outlook, my weekly strategy report. The fact that we're starting to see the momentum indicators rolling over underneath areas where the selling pressure may start to pull more of a move, whereby you've got this RSI failing under 60, MACD lines back towards neutral and then flattening off. You've got stochastics flattening off around 80. So this near-term technical rally seems to be at an end, and it's moving into a more consolidation point. But if you start to see the market slipping under support on a closing basis, then these momentum indicators would be rolling over at levels at which the medium-term bears would be quite happy, I think. So it'd be very interesting to see how this one plays out. And a breaching of that 12,070 and 12,050 being Friday's low, but closing below those levels would start to generate this corrective move, probably back towards that 11,845 support of the old neckline, and that would also encompass this mini support of the higher low at 11,900. So let's have a look at the hourly chart. And again, just starting to roll over. But if this support can hold around this pivot, then there'll be more of an improvement starting to come through. But as I said, if that pivot does start to go, that is a key level. And then you'd likely see these momentum indicators again falling into a more negative configuration on the hourly, and start to look like a more corrective move. clearly the 12,227 level of resistance, which is equally a high area from late May. That is your main line of near-term resistance. So I wish you good luck in your trading today, and I'll speak to you later.